I remember this economics teacher telling me one time about this theory of unlimited wants. So in essence, it was human beings have unlimited wants and needs. And a lot of times the things that we want cost money. And sometimes those very same things that we want, it costs more money than cash that we have on hand.
Oh, well.
Okay, well, maybe not for everybody. But for those of us who don't have millions of dollars in cash, when we have to make larger purchases like cars or houses or tuition, what do? We usually have to pull out a loan for those things. And who do we get these loans from? Usually it's a bank or some kind of company or private lender. And we can't talk about loans without talking about FICO scores. Hey, click the like button. Please. What's up, guys? This is Donnie, and by the end of today's video, you'll know all the basics that you need to know about FICO scores and the 5 factors used to determine them. FICO is an acronym that stands for the Fair Isaac Corporation. And this company was founded back in 1956 by an engineer named Bill Fair and a mathematician named Earl Isaac. And while I'm sure the company's kind of changed what it's done over time, today, the Fair Isaac Corporation specializes in analytics, namely the analytics that make up your credit score. At the time of this recording, your FICO score is a number that ranges from 300 to 850. And I do think that scale will change over time, but whether it's 300 to 850 or 300 to 950, your FICO score is essentially a number that's based on your credit history. And it tells creditors or loan companies just how creditworthy you are. So in their eyes, the higher this number, the higher this FICO score, the more likely you are to pay back your loan in a timely fashion. And let's keep it real. Lenders reward the people with good credit. So if you have a really high FICO score, really good credit, you end up with much lower interest rates. And what does that mean? It means that you could potentially end up paying thousands of dollars less for your car, for your house, for these large purchases. On the flip side though, if you have really bad credit or low FICO score, you could end up paying thousands of dollars more. To make this video a little bit more real to me, and hopefully a little bit more real to you, I decided to pull my own FICO score, which I've never actually done. Now, other lenders have pulled it, but I've never pulled it myself. Yes, I've gotten a credit score before, but I've never ever pulled my FICO score. So I went over to the official website at MyFICO.com and I dished out about $60 to do that. So let's take a look at a few things. This comes from a report that I pulled on April 29th, 2020. And it starts off with this summary of my credit score from the 3 different credit bureaus. So Equifax, 748, very good. TransUnion, 772, very good. And Experian, 745, very good. And again, it's that number range from 300 all the way to 850. Scrolling down, right up here it says FICO Score 8 is the most widely used FICO Score version. So I guess these numbers are coming from the FICO Score 8. And it includes, shows some of the factors that make up your score. It also shows some of the other ingredients that make up your score. And scrolling down a little bit, this is where it really got interesting to me because I didn't know this. I didn't realize that there were so many different types of FICO scores. I didn't realize that you had industry-specific FICO scores. So for example, this one is a FICO auto score that's used in auto lending. And if you notice, these numbers are a little bit different than the ones up top. There's a FICO Score 9, which is a newer version for auto lending. And if you notice here, these numbers are different than the ones I had up top. And even the range is different. So it's not 300 to 850 here. It's 250 all the way to 900. There are FICO bank card scores for credit card lending. And there are FICO scores for mortgage lending. And I'm happy about this one because what this says to me is that if I were to go back to the US to try to buy a house, that I should get a pretty good interest rate, a pretty low interest rate, which is nice. Straight from the horse's mouth, straight from the Fair Isaac Corporation website, these are the 5 factors that determine your FICO score. Number 1, amounts owed. So think about your accounts. How much do you have left to pay back on these accounts? Are the balances high or are the balances low? Number 2, credit mix. So what are the different types of credit that you have? So mortgages are a type. Car loans are a type. Credit cards are a type. Retail accounts like Apple, like Best Buy, those are a type. Number 3, the length of your credit history. So how long have your accounts been open? Number 4, payment history. And this one's simple enough. Do you pay your bills on time? And do you do that consistently over time? And number 5, new credit. So have you opened any accounts recently? Have you had any loan companies pull your credit recently? Now, I listed these out of order on purpose because I wanted to ask you a question. So of these 5 factors, which one is the most important? Payment history. So payment history makes up 35% of your score. So pay your bills on time all the time. Which one's next? Amounts owed. So amounts owed makes up 30% of your score. So keeping your credit balances low can be a big factor in having a better FICO score. Number 3, length of credit history. That makes up 15% of your score. And you round things out with number 4, credit mix, and number 5, new credit, each of which make up 10% of your FICO score. And this is worth highlighting in another way. So if you look at those top 3 factors, they make up 80% of your score. So 80% of your FICO score is you making your payments on time, keeping your balances relatively low, and doing that consistently over time. To finish up today, I wanted to show you the quick, easy, dirty version of how to figure out your FICO score. And don't worry, it's super simple. So to calculate your FICO score, first, you would need your credit score from all 3 credit bureaus. And usually, when your credit gets pulled by a lender, they'll have those 3 numbers. So you'll arrange those numbers from lowest to highest or from highest to lowest. And you'll pull out that middle score. So that median, that middle score, is your FICO. Or at least the ones that lenders are going to use. Let's do a quick example. So let's say a guy walks into an Audi dealership to get a new car. So the car lender pulls his credit, and he has a 480 Equifax score. He has a 515 from TransUnion. And he has a 460 Experian score. So which one is going to be his FICO? Which one is going to be the one that lenders use? 480. All right, guys, well, that'll wrap up today's edition of Mind Over Finance. I hope you got something from today's video. If you did, don't forget to hit that like button, share, comment, and subscribe. And I'll catch you in the next one. Peace.